Hi, good afternoon, everyone. Welcome to our monthly Traders Talk for April, the month of April. Okay, my name is Elki, and I'm your speaker for today. All right. Okay. So, not really a very good start for the month. Okay. So for today's April Traders Talk, as like it's actually pretty much similar with what we are seeing last month. We will still very much focus on US tariff, and this month we are seeing a worsening situation actually. And actually on last Friday we just had the fourth most drop in a single day for US indexes since World War II. Okay, so and today we are seeing we had Nikkei topics, all this drop more than 5%. Some of them they even hit 10%. Yeah, so I believe by the end of today we should be seeing market commentary. Everyone talking about today is Black Monday. Okay, so yeah, today is a Black Monday, and we are here to we are here from Inter-Pacific Securities, trying to share with you some of the ideas and some of the views that we have about the markets, and hopefully this can help you and me to perform better, and also we'll be able to weather the volatility of the markets and also make a better decisions in coming days, weeks, or even months. Okay, so good afternoon, everyone. Okay, thank you for joining our session today. So if you're able to hear me clearly, okay, please drop me a clear in the comment at the comment section, so that I can know that all the audio all are good. Okay, so if you cannot hear clearly, please let me know as well. Then I can do something from my side. Okay, otherwise we're just gonna carry on, and hopefully by the end of the session today, it can help you guys to understand better about why what is this tariff about, and how it gonna affect you and me. Okay, okay. So before I start, just a little bit sharing of myself. For those who do not know who am I, my name is Elki. Okay, I am currently a head of retail dealing with Inter-Pacific Securities. Okay, and I have been in this industry since 2012. That's about like 13 years, a little bit experience, but still a lot more to learn. And but here today, I'm gonna share with you some of my ideas, that some of the things that I have learned and gone through for my past more than 10 plus years experience, and hopefully from there we're able to achieve something. Okay, yep. So all right, so what we're gonna do today is for the this traders talks is actually is a monthly event whereby we started it with the idea of trying to share with our followers, our clients, our believers, that to help them to understand what is the current ongoing matter, how to what are the potential opportunities in the markets, and also what are the things that lying ahead, like such as like the seasonality and the earning season audits. Okay, so as usual, we're gonna start with some of the review from our March 2025 sections. Okay, so if you want to watch it, you can play it back from our YouTube channel. And if you haven't followed our YouTube channel, please do and follow us. And we really appreciate if you follow us and show us some support. Okay, so after that, we're gonna look into this matter that everyone is looking at, the reciprocal tariff and its impact, and what are the things that we should be looking at. Okay, finally, we were gonna wrap it up with some of the seasonality in the month of April, and how should we deal with it. All right. Okay. Yep. Okay. So I saw some of them. They are replying clear. Good. Yep. All right. Wonderful. So let's start our review today. Okay. So for the month of March, okay, for last month, we can see overall generally throughout the index, we can see KLCI and the small cap both are down more than 2%. The blue chips is down nearly 4%. Okay, and across all the industry, most of them they are in red except for energy and also utilities. Okay, Yeah, so among all, we can see telco, healthcare, and financial services are the one that been really dragged down a lot. Whereby healthcare, it was a continuous selling on the dampening outlook on the glove, and also with the worries on the medical costs, all this. Okay, and whereby the financial services, they are coming down from the high area. Okay, because in February, banks still holding well, but last month we start seeing more retracement, especially in some selected bank counter, like the one that dropped a lot is CIMB. Okay, yeah, and also we have telco. Okay, but if we look into the real, how to say, okay, let me rephrase it. Okay, but if we really look in detail, okay, this drop is actually not that genuine, in the sense whereby um, in the month of March, there are a lot of dividend being distributed. Okay, there are a lot of dividend distributed. So there were price adjustments. Okay, so although we have financial services, it dropped 4.88%, but partially were contributed by the dividend adjustment. Okay, yeah. So similarly, it go to telco, whereby Timecom, they have quite a huge dividend being paid out. Okay, so these are some of the reasons that contributed to the lower adjustment in the pricing for the month of March. Yeah. So if you look back, look through KIS screener, like KIS screener, or Malaysia Stockbase, or whatever, you can see that last month it was a month that really there's a lot of dividend being paid out. Okay, yeah. So partially it wasn't be fully contributed by the bearish sentiment in markets. Okay, but partially is on the dividend adjustment. Okay, yeah. So if we look into the seasonality that we were sharing at the beginning of the March, okay, so at the very beginning of the March, we have mentioned that for March, it's a month that we really want to avoid, whereby seasonally it is a bearish period. Okay, seasonally, March is not a good month to engage. It's a month for us to reduce, trim down our positions, and try to buy back at a lower price. Okay, and why is it so? I'm gonna share with you later. Okay, it is related with the seasonality for the April. Okay, but of course, this year is a very unique year, a very special year, whereby we have this global economy going on. Okay, yeah, so we might really want to be selective in selecting the counters or the sectors to be engaging. Okay, yeah, but we can see that from a seasonality, March, especially on transportation, energy, and technology, they are the one that's not really going to perform well. And if we look into it, the result is actually the opposite, whereby we are still having energy holding there. It was still in positive last month. Okay, and technology is just slightly down, less than 1%. Okay, and transportation is just 1% plus. Okay, and if we look into the charts, why is it so? Is because technology has been really got kicked down in the month of February. So in the month of March is recouping some of the losses, whereby now we are seeing the continuation selling down, especially with bearish sentiment kick in. Okay, yeah, so technology as the so-called the risky high risk sector is the one that been really true and being really sell down the most. Okay, whereby energy wise, we are seeing the Brent crude oil price breaking below the 4-year low. Okay, so at this moment, even though we have many of our oil and gas company, they are more focusing on maintenance and also servicing, whereby depending on contracts, especially those from Petronas. Okay, the fluctuation in the their quarterly earnings, okay, it might be minimal compared to others. Okay, still, the weakening in the crude oil, in the Brent crude oil, like be Brent crude oil, US crude oil, okay, it might affect the amount of capex that Petronas, or even right now we have Petros coming in, and from that it will adjust the outlook of, and also the pricing for all these oil and gas stocks. Okay, so with this break, this is for Brent crude oil. This is actually a major break at $68, and we are seeing that with this support break, we might see Brent crude oil continue to trend lower, especially if the market gonna stay on bearish and also slowing down economic growth kind of perspective. Okay, yeah, because the demand and the usage for the crude oil, if it's go lower, then the sentiment wise, even the earnings could be less impacted, but the buying sentiment, it won't be there. The buying support, it won't be there for the oil and gas counter. Okay, so that is something that we, despite that we are seeing that energy was still supported at this from the month of March performance. We really want to be really careful on energy sector, whereby this month we might see stronger reflections, or it might catch up with the selling. Okay, as for utilities, it's a defensive sector. Okay, so it might be more it might be more defensive and less vulnerable to the drop in the market, but we still expect some weakening. Okay, but utilities, if we have a very sharp drop in the markets, we might see utilities able to might able to tank the decline of the markets. Okay, so for some of you guys, that if you don't want to exit from market, you still want to keep your money in the cash, in the markets, then you might want to really consider some of the utility stocks, like maybe Tenaga. Okay, Tenaga, especially right now, we have NTL, all this energy roadmap, all this thing going on, and the prospect actually is still there. Okay, you might want to try to do some portfolio switching over. Okay, yeah, and also probably some of the renewable energy kind of picks. Okay, yep. So if we look into FVM we can see with today's drop, today we are seeing the FVM it gapped down below 1500 levels. Last Friday it was close above 1500 levels, and today it was more than 30 points gap down, and then drop at the lowest it was down 80 points. Okay, so that actually wiped off the gains for 2024. Okay, so here is where it's 2024, and here is where we are right now. Okay, that wiped off the gain for 2024, and then it's formed a big time frame major reversal. Okay, so no doubt we currently are below 200 days moving average. We are below 20 days moving average. Immediate trend wise, we are going on a downtrend. Okay, and market might prone for a further weakening. Okay, but if we look into the small cap index wise, we are seeing that small cap index is entering the support zone, the support region. Okay, after being dropping from early mid of last year, about like 20,000 all the way to 30,600, near to that level. Okay, so even for this year high is from 18,000 all the way down to below 14,000. Okay, so some of this market actually has priced in this tariff that Trump has been talking about. US has been warning. Okay, so the price reflection is actually partially set in. Okay, yeah. So with all this, we might see currently is, I won't say it's a knee-jerk reaction. It's a panic selling, but it's also a reflection of what market is expecting. But it might not be as bad as what we are thinking at this moment. Okay, in fact, it gave us some opportunity to reassess our holding and also relook into a market for those that give with a fair or even cheap valuations for us to get in. Okay, yeah. So if we look into the crude palm oil wise, we are seeing crude palm oil, despite the recent rebounds in end of March. Okay, we are seeing the selling down, and it continued to uh, cap at the 4,700 arrows, and it might come back near to the 4,000 levels. Okay, so for crude palm oil plantation counters, it more towards sideways and more towards downward developing into the trend. Okay, so we can see this is the high in the year 2024 at 5,000 something, and right now the high at 4,700 is forming a lower high, and we might see it retest the 4,100 levels, and a breakdown we might see the crude palm oil price back to the 3,700 levels. Okay, so if that happened, then we should expect that plantation counters, they might not able to deliver such a strong results in the following months. Okay, following coming next one or two the earnings. Okay, yep. And just now we talk about the crude oil, the Brent crude. Okay, and next, yeah. Okay, so we done reviewing some of the markets, what's happening on some of the commodities, and also what happened in March. All this, so we can see that the selling in March, or the reason selling last week, most it was mostly contributed by this tariff talk, and also making preparations for this tariff. Okay, this reciprocal tariff that actually took place on last Thursday morning. Okay, so I believe I don't need to go in deep into details on how this reciprocal tariff it was, and I believe it's all over the social media and all over the WhatsApp messages, all these things. Okay, yeah. So this basically how US is putting on this reciprocal tariff is based on the idea the Trump was saying that they are being exploited by most of the countries. They are charging towards the US product. Okay, products that exported from US. Okay, and they are not charging as high as them. Okay, so right now they are trying to put it up that they're gonna charge this tariff. Okay, and it's a discounted one, because if it's a fully reciprocal tariff, it should be whatever you are charging us, then I'm charging you back. So right now it's just half of what you are charging us, and that's the discounted reciprocal tariff that I'm putting up. Okay, I believe this is a strategy that Trump is using to warn the nations, their trading partners, to tell them that, hey, I still have space that I can charge you further. Okay, and to make it just full, and not having people to say I'm wrong doing things. Okay, and also I'm trying to still be friendly and trying to use that as strategy to get some of the benefits from the country. Okay, it's either increasing the number of exports products from US, or they're gonna reduce the tariff that all these nations are charging to the US products. Okay, but no matter how the negotiation gonna be going on, this wide effect that's gonna put on throughout all the nations that trading with US, it prone to create some of the impacts to the economy, especially the global economy, because since US is the one of the top nations. Okay, it gonna create a slowing down in the economic growth, or even stagflations that we are talking about, because with this tariff, we are likely to see the costs passing to the consumer, and that led to a possible inflation that's just being tame in the year of 2023, 2024. We just reduce and trying to tame down the inflations that surge up on the post COVID, but right now we're having this thing that creating the inflation again. Okay, yeah. So another impact that might happen is we might see trade diversifications that happened, which similar like what happened in the year 2016, 2018 when the first Sino-US trade war started. Okay, yeah. So with all these things, all these views happening, that create the turmoil in the markets, whereby on last Friday we already seeing that most Asian market they are coming down. Okay, and it felt already very bad on last Friday, and it became worse when on the Friday night China has retaliated with announcing a 34% reciprocal tariff on the US goods. Okay. And on that night, and also this morning, we are seeing the crashing in the most of the financial indexes. Okay. Yeah. So we can see, like just now, what we said, it's Nikkei down more than 5%. We have Shanghai, Shenzhen components, A50, Hang Seng is near to 10%. Okay. So immediately, everyone is reacting with the selling. Okay, yeah. So everyone from really go into a panic selling and also risk off modes, trying to get more cash into their hand, so that they are more prepared for stay on the sideline on current bearish move. Okay, so why they are such behaving is in a such reaction is because generally tariff is something that economies or even business, they don't really like it. Okay, tariff is basically a taxes. So what is this tariff about? Tariff is actually basically is the taxes that imposed by the government, okay, on all these goods and services that imported from other countries, like what's mentioned right over here. Okay, so when generally when this happen is to protect their local industry, and supposedly when they are doing that, they should do it selectively on certain industry. Okay, and not widely on every single aspect. Okay, because definitely they will steal some of the products that you will have nations that will have to really rely on the imports goods. Okay, just like for US wines, most of their coffee beans are imported from Colombia or other Ivory Coast country. Okay, so in such short time they won't be planting cocoa beans, all these things. So they are also, the weather might not be suitable for them to explore into cocoa planting. Okay, yeah. So suppose they should be only focused on some of these sector and industry that they really want to protect for the local industry players, their local players, and from that to stir up the economy activities for the local. Okay, but what happening on this reciprocal right now tariff that US is doing is really hurts the global economy, and it's more towards coming to the second reason why Trump is doing is to further generate government revenue, and also as a negotiation tool for US to use in negotiating with other countries with their trade disputes. So immediately we can see that Vietnam has gone to them and then talk about, hey, we're gonna impose 0% tariff on all the important US goods. Okay, so this is some of the impact, some of the effect that US really wants. Okay, especially smaller countries that really rely on US businesses to survive. Okay, yeah. So initially at the very beginning of very end of last year and beginning of this year, we are seeing they are doing on the auto sectors and some of the steel industry, all this thing is more towards on the protect their local industry side. But right now it became more focused on the government revenue and also as a negotiation too. Okay, so moving forward, we should expect there should be some amendments and also adjustment on this reciprocal tariff that's being announced. Okay, we should see there would be a lot of adjustment depending on how well the negotiation happening between the two country leaders with the country leaders with the US. Okay, so for those who are taking more actively talking and negotiation with the US country, we might see a lower tariff and changes in the sentiment for the country. Okay, so if you are looking for opportunity in this market, you might really want to follow very closely because, for examples like Vietnam is very heavily on their apparels, on some of these furnitures to exporting from Vietnam to US. Okay, so if the tariff really stay at 40 something percent, and that could benefit other Southeast Asia country, like maybe with a lower tariff line, possibly Malaysia or Philippines or others like Brazil or whatever. Okay, but if he able to negotiate to become lower, then the business might still stick with Vietnam. Okay, so all these are some of the news, some of the events that we might really want to pay attention and be eyeing throughout this period of time to like really gauge what are the potential opportunities that might be arising. Okay, yeah. So like what we were talking just now, with this higher tariff, we will be seeing that increasing price and inflation um, because for the tariff, they are not charging the nations. Let's say right now US is charging 49% towards Vietnam goods. Okay, it doesn't mean that when they are exporting from Vietnam to US, okay, they are charging this 49% to Vietnam. Okay, but they are charging this 49% to US businesses who are buying from Vietnam. Okay, so for all this US business that being gonna charge 49%, what they're gonna do is, oh, I still need I still need the goods, but I might don't want to import from Vietnam, but I import from other country with a low tariff, like maybe Philippines, maybe Malaysia's, and I might even want to set up a new manufacturing line in all these selected countries, okay, for a long-term solutions. Okay, so all this cannot be done overnight. Okay, so since this tariff is being kick-started, the business they will have to suffer from a lower margin, okay, or higher cost, okay, due to this higher tariff, and eventually they have to put up capex to if they are doing any of all this trade diversion to other country, and all this it will derail the economic growth that happening, okay, on those original importing countries, and some of those that country that accepting all these orders, they might be benefited. Okay, so there will be some who are really being dragged down on the economy, but some could be benefited from it. Okay, but when it comes to the global overall economy wise, we might suffer because with all this increasing of the cost that happening, we know that businesses they gonna try to pass it on to the consumer. Okay, and that gonna increasing the price and also lead into the increase in the inflation again. Okay, yeah, so we should see the inflation figures to start reflecting in the months. It might happen 2 months later or a quarter later or even slightly longer. Okay, because some of the countries, some of the products, some of the businesses, all these things, they have stock up ahead of the tariff announcements. Okay, but we could see some of the reducing in the orders, all this, okay, on some of these exporting countries. whereby it could hurt their business, okay, their earnings. Okay, so one example is like on the glove, on Malaysia glove. Okay, yeah. So if you look into Top Glove, like Big Top Glove or Hatalega, okay, so they had been talking about increasing China tariff on glove products, medical products, on the Chinese medical products since last year, and it's gonna go into effect early of this year. And US businesses, they have been stocking up for 6 months, okay, and that actually led to a weaker outlook that and also the forecast of their businesses in coming May earnings, and or it might even further extended to August earnings as well. That's why we are seeing such a drop in the share price for Top Glove and also other glove companies. Okay, similarly, with this tariff going on, we might see some of the especially those exporting counters, exporting companies, they might experience similar situation whereby their earnings result could be face immediate impact, whereby if they have this stocking up for the next 3 to 6 months, then it means that this company gonna experience a much lower revenue in the coming next 3 to 6 months. Okay, yeah. And worse is we might see some of the potential retaliatory measures like what we are seeing China is putting up, and European Union, they are in negotiation and they are getting ready for it. So that would create so-called World War III, but in more in towards economical mode and also in the financial model. Okay, yeah. So under all these circumstances, that could bring us to a stagflation or even a global recession, whereby with all these concerns and worries, and that trigger the selling and what's happening into our market at this moment. That's why that leads into the most of the indexes, financial indexes, they are going on downtrend, because everyone started to see these are some of the things that could happen, and they really want to get on the sideline with more cash on hands, okay, rather than being exposed in the markets. Okay, yeah. So some of the highlights that really matters to us will be our Malaysia's wise is 24% tariff, and it's still considered competitive, but that even though it seems competitive among the Asian nations, but still the impact towards Malaysia is very significant, as whereby we will be suffering from the orders that we are sending over to China. Okay, because if China is being put up with such a high tariff, then the demands and also the production line in China, it might go lower, and hence from that it could affect the demand on the base materials or raw materials from Malaysia, whereby it would it will drag down on our exports to China as well, and from there our GDP could be revised lower. Okay, yeah. So so I've been talking about all this bad thing about tariff. So what are the risks and opportunity that might be arising? Okay, so one thing that we would really want to be expecting is with the anticipation of inflation, okay, whereby all this cost passing mechanism that is likely to happen, okay, and the price could go higher, we should expect that a lower interest rate environment might not be coming back so soon. Okay, we know that from US Federal Reserve Chairman Powell has been talking about, they have been looking at the inflations to set their interest policy. Okay, of course, inflation is one thing, and also recession is another thing. But in order for them to lower down the interest rate based on recessions, the unemployment, the jobs data, that would mean that it has to happen first. then only they will able to see it, right? Okay, so the very first impact that we should be seeing is we're gonna see the high price that coming in, the inflation that coming in, and that would affect our purchasing power, the economic activities, and from there the business gonna go slower, and we will see more laying off, and also eventually then only we will be seeing recession, and also when that happen, the economic growth will be going on a downturn here, and from there only we will start seeing feds or this thing they're gonna take actions, and that could be months from now. Okay, yeah, so you can see somehow Trump is right, whereby when he say that feds is always gonna be late in lowering down the rates, okay, because they really have to follow the plug and figures to like really to justify their decisions, okay, but definitely that's gonna be slower than what market is reacting, okay, yeah. So with all this anticipation, what we can see is that is likely gonna drive down in the share price, in the equity price, uh, let it be Malaysia or US or China, okay, but that actually also led to a cheaper valuation in equities, especially on some of these blue chip stocks that you have been wanted to buy. Okay, so during early of this year, we are seeing our blue chips index, the PE is somewhere around 17 to 18, and it's higher than the usual 14 to 16 PE ratio that we are looking at it. So with currently the selling down, okay, we might expect the PE trend gonna normalize and go back towards 12 to 14 kind of ratio. It might happen, okay? Yeah, so with all this, it actually gives us the opportunity to get in some of these blue chip counters. So I have to be really clear, you really want to focus on blue chips whereby they will able to sustain their business, and they also have enough cash to sustain their business. Okay, so if we look into business cycle wise, economic cycle wise, uh, right now we are experiencing a potential going into recession, or recession might be happening. So what will be the next in the business cycle or the economic cycle? It will be first, it will be defensive, whereby consumer discretionary and also utilities. Okay, these are the two sectors that might be benefited at this point, whereby healthcare it might be coming in. But if we don't want to be stuck in some of these sectors, because the share price might not be performing as well, it might just maintaining right over there, okay, and giving you some dividends. Um, if you are keeping cash but looking for signal that the revival in the economy and getting in, then that would be some of the materials, basic materials like and commodities could be the sector that you like really want to focus on. Okay, like crude oil, not really crude oil lah. Okay, personally, if for Malaysia wise, I will focus more on the crude palm oil. Okay, yeah. So if you really refer back in for the past 5 years from 2020 COVID until like last year 2024, how the economic cycle has been going through. Okay, from some of the healthcare stocks to plantation stocks to bankings to technologies, manufacturing, then technologies, all this. Okay, so basically the cycle it might repeat itself. Okay, so you might really want to besides those defensive one like healthcare and also utilities, you might also want to focus some of uh, picking up some of the materials counters, and also manufacturing line counters for this coming play. Okay, so the strategy wise will be, you might really don't want to focus too much on outside what happening in the markets. Okay, so that you are not being dragged down or demotivated by what's happening outside. But at this moment, we should really focus on ourselves. Okay, review our portfolio, try to reduce speculative stocks or cut the speculative stocks away, and also for those companies that still consider overvalue being lifted up on the the prospects, the upcoming prospects. Especially last year, we had really quite a pretty decent amount of stocks that have been lifted up on the data center play, data center talk. Okay, yes, not to say all the data center gonna be cancelled or what. It can still going on, but last year market was overly optimistic towards the outlook of the economy, and a lot of this company, they have been the share price have been skyrocketed and it's overvalued. Okay, so if you're holding any of all this, then you might really want to really look into it, consider to cut some of the exposure, because the share price can go lower and you might able to buy back at a cheaper pricing. Okay, so this is some of the review that you really want to look into it, and also try to ask yourself how much is the cash that you're willing to allocate, set aside to get to tap into the market when all this turbulence is over and we are seeing the revival in the economy. Okay, because by that time the economy could be really bad, and you might experience a downturn in your business, and you might need more cash than usual. Okay, then you might really want to ask yourself how much money that you're willing to allocate and set aside, and yet you still have money to survive, to maintain your business, or to maintain your lifestyle. Okay, and that money is purely for you to invest in the markets. Okay, so that you can able to grab some of the share and get stuck in the market for 6 months to even 24 months. Okay, then that will be the fund allocation. Once you have done identify that fund, then you really want to look into the industry, ask yourself what are the business that will still be there, and market when it comes back, it will grow and continue to, it will be good for you to invest and hold. Okay, and just try to identify maximum not more than 5 counters, not more than 5 industry. Okay, to invest and hold. Otherwise, it will be too scattered. Okay, try to look it at three. Good to looking at 3 or maximum by 5. Okay, and you have a little bit of diversification right over there, but also you will have some of the stock that is aiming for more towards maybe like 6 months to 12 months kind of impacts, the economic impacts, the growth, and some of them you're looking at possibly 12 months to 18 or even 24 months kind of impact for it to grow. Okay, yeah. Otherwise, if we are not planning ahead, as the time it goes by, then you realize that some of all these stocks, it is a good counter, but maybe 2 years later the share price has been high and you will be complaining it's too high to get in already. Yet the economy is growing, and by the time it can go higher and even higher. Just like if you look back from right now to the year 2022, some of the tech counters, some of the stocks that have been running on the, let it be the data center play, let it be some of the banks on the interest rate hike cycle, some of stocks that going on the AI cycles. So if you have been missing from profiting from all these cycles, all these opportunities for the past 2 or 3 years, then you might really want to ask yourself, what are the changes, one of the mindset that you want to change, so that you are not missing for the cycles that gonna come 2 years later. Okay, that's where we gonna need to start planning at this moment. Okay, and finally is the methods, is let it be DCA, or you want to identify a way to identify that the stocks is already undervalued, or just a very simple technical entry. It's all okay. Okay, yeah, it depends on which one is more suitable and more comfortable for you. Okay, yep. So that would be generally the idea for how we should handle the current volatility, the current turmoil in the financial markets. Okay, how we should prepare ourselves and how we should settle down come down and also have a clear plan for the coming 3 to 6 months. Okay. Although we are having this is monthly updates, monthly trader stocks, but I believe this is a good time to start setting up all this so that we are more prepared. Okay. Most likely for the coming 3 to 6 months, we should see the bear remains intact. Okay, but once we have a clear idea on what we want to do for the next 3 to 6 months, what we need to do is just execute our plan accordingly. Okay, and get updated with the markets, which we will continue the updates in our trader stock every month, the first Monday every month. All right. Okay, so last but not least, for today, we will be looking at some of the monthly updates and also the seasonality, whereby for some of you guys who wish to look into some of the counters that has been posting good results, has been growing, but you do not know where. Okay, so this is one tools that we are providing in our Inter-Pacific Securities platform. Okay, in our iPad Online, where it actually lists down 20 counters that have the best continuous growth over 5 quarters. So it doesn't just listing it based on just 1 quarter results, but it has to continue growing for the past 5 quarters. Let it be from losses to profits. Okay, but it has been growing on their net profit for the past 5 quarters. Okay, so for the month of March, we actually have 3 counters report their earnings in the month of March, whereby Binastra and MyNews, they are still maintaining good results. Their net profit still growing, but for CYL it was CYL it went lower. Okay, in the month of March. Okay, yeah. So this is the latest one. Okay, the latest the list that we are having. Okay, so we can see for just now Binastra. Okay, Binastra, we still having a higher. Oh, sorry, this lower revenue. Okay, this lower revenue is actually year on year. It's not on Binastra. It's on Muda Jaya. Okay, my mistake on that. Okay, yep. So for Binastra and MyNews, we can see their net profit, they still growing. Their revenue are still growing as well. Okay, whereby if we look through this new list, they are a few. Despite that, their net profit still growing, but the revenue is actually lower. Like for SCG Berhad, TaxCam, and also Muda Jaya as well. Okay, Muda Jaya is actually a turnaround. Okay, and it was a very drastic jump in their net profit. But okay, don't get too excited. This is a 10 cents counter, a 10 cents stocks, and the jump in the net profit is mainly due to a reversal of provisions on their mine restorations and also land reclamation. So this could be not sustainable on their net profits. Okay, yeah. So for others, it could be quite genuine with their revenue and also net profit both are growing for the past 5 quarters. Okay, and this month we will have Seaview is reporting in the month of April. Okay, so where to find it is if you are a client of us, then what you need to do is you just select any counters. Okay, then you just go to stock info and go to equity tracker. Okay, so once you come to equity tracker, then you can just come to highest continuous growth in net profit. So you get the whole list right over here. Okay, same thing, we have other lists like higher growth in net profit quarter on quarter, or those that turn around, and continuous zero are those that have been performing, okay, for net profit for more than 20 plus years, and they have been delivering dividends and they are stable. Okay, so these are some of the stocks that you might want to look into it as well, because these are the counters that have been proven themselves. They have been weathered through multiple financial crisis. Okay, yeah. So for April wise QL, there's only one to pay attention, which is Seaview. Okay, and for the seasonality wise, ironically is for the month of April, usually it is more towards a uh, uh, bullish month in the month of April. Okay, but we can see for the month of April, the buying, it won't be focused on the blue chips. Okay, it will be more on the small cap. Okay, which if we look into the performance for this year, that could be possible, whereby we had quite a strong selling at the beginning of the month, whereby when it comes to the end of the month, if we are seeing some of the bargain hunting, it might recover and rebound. Okay, yeah, but uh, from what we are seeing right over here is we should be for those who are interested to be into market, because you are seeing that the market dropped so much, it should be rebounding, things are cheap. You should be focusing on more towards a short-term trading strategy, whereby if you trade, you see money. Let's say if you're buying 50,000 units, you trade, you get in at a cheap price, you see money, then you might really want to get out a bigger position, like maybe you're going to get out 40,000 or even 45,000 of your allocations, realize the profit, and only hold a very small units for a long-term holding. Okay, yeah, so that would be the executions method that is more suitable at this current juncture. Okay, and if we look into the industry wise, we can see that most of them, they are in green. Okay, with the top performing will be on utilities, energy, healthcare, and also transportations. Okay, so usually for energy, April is the best performing month, but like I said, until you see a clear reversal in the crude palm oil price, otherwise it will be hard for the oil and gas stocks to rebound. Okay, so if you really want to do bargain hunting, bottom fishing for the energy counters, you really want to pay attention on the crude palm oil price. Otherwise, with the economic outlooks to stay weak, oil and gas energy counters might not be something that you really want to hold for too long at this juncture. Okay, even though seasonality, they have been performing for the past 5 years. Okay, but you can see in 2021, that's the year whereby we still having COVID, and it still can end up in red. Okay, and utilities has been always records in positive. Okay, in April, so possibly you might want to look into some of those, like Tenaga is, it could be one of those counter that you want to monitor and look for the support area, so that whenever it comes to support area, you might want to scale in the smaller units and try to do bottom fishing. Okay, and or even at some of the small cap counters. Maybe right now, those that oversold, they still have the prospects that happening right now. Okay, that has been been selling down. Those are some of the small cap counters that you might want to look into it. But remember to get in and get out once you see, when you see money. Okay, don't be greedy at this point, but more focus on survival. Okay, last but not least, for those who are looking for switching their money from risky assets to more safer assets wise, asset class wise, REITs could be something that you might want to look into it. And these are the 6 REITs that are having a higher dividend yield. Okay, so as the price go lower with the bearish sentiment in the markets, we might able to get some of the REITs at a cheaper price. Okay, and at this point, I would say that we might not want to focus too much on all this, like more kind of REITs, but more, or even office related REITs, but more focus on maybe like warehousing, storage kind of REITs. Okay, yeah. All right. Okay. So that will mark the end of our section today. If you have any questions, you can feel free to put it up at the comment, and we will attend to it. Otherwise, we're gonna end our section here today. Okay. So for those who have looked through some of our features, like our continuous growth, our list of the counters that been putting up good dividends, some of this info that you think is gonna help you and you wish to get them, you can scan this QR code over here and register as our clients, or you can always contact us at all this number or even social media pages, whereby uh whereby we're able to assist you to open an account and also enjoy all these features. And of course, our dealing team will be always there to help and assist you to hopefully from there we're able to achieve something and also get into some good entry this year. Okay. Last but not least, we really appreciate if you like our videos, our sections today, please do go to our social media page like our iPad TV to follow us, or even our Facebook page, iPad Online, to stay updated with our coming updates and also sessions. Okay, and this Thursday we're gonna have a market outlook, whereby me personally will be doing sharing on the technical outlook of the market, and our research analysts. Okay, our research analysts will be sharing on the global market outlooks and also Malaysia equities outlook in our sections on this coming Thursday, starting at 5:30 p.m. Okay, same place at our YouTube, iPad TV, or at our Facebook as well. All right. Okay. So if there is no other questions, then we will end our section here today. And thank you very much for joining our section. And good luck. All the best, everyone. Thank you. Bye bye.